Hello guys, as you can see today, Thursday, the market was hit with Wall Street guys. So when we say why did this happen, understand guys, if you go to the general media, CNN, CNBC, Bloomberg, any website, any media, what they talk about? It's about the Fed. It's about unemployment. It's about coronavirus, the second wave. It is about this. It's about this. But these news, we have them each day. These news, even if it is this news, understand the market. The market, we have two things. We have investors that don't sell. Okay? So when I see this word investors, I get astonished always why they speak about investors. They don't understand the difference between what we call investor and a trader. There is a big difference. And the media always use investors. Investors are scared. It means, for example, someone who has $5 million, he invested in Google. And today, because coronavirus, he will sell his shares. This is stupid. And this is, guys, those who follow me for many years, I showed you by, it's not technical analysis, I showed you what is going really in the market. Okay? What is going really in the market? What does it mean? It means there is what we call the news information that comes to the market. Now, who reacts to the news? It's not investors. So that this word they use, it's false. Now, I know someone tells me, if it is false or true, trader or investor, it doesn't matter. No, it matters a lot. It matters a lot because people, they don't understand. When you don't understand what's going on in the stock market, how things work, you always be confused. Okay? So let's go to the chart very quick and I show you some stuff. Okay. So this is the chart, as you can see. Today, let's go to see the market ETFs. This is the Dow Jones. Now you see that the market has lost 6.81% today. Now, why? Is it just because first you see a gap down here? It means Dow Jones and almost stocks have began to sell short from yesterday. So and today they continue selling short. Okay? The whole day. Now, is this something related to investors? No. It has nothing to do with investors. It is day traders. Either hedge funds or day traders in the world, and they see that the market is going down today and they just hit it with selling short. That is what's happening. Okay? People who invested here, they will never sell just because there is coronavirus. Okay? Now, for gold and silver, as you can see, they are strong. They didn't go that much. I see always when there is silver and gold is always opposite of the stock market. Okay? So gold, even though it goes a little bit, it goes only 0.72%. You see? It's not a big deal. Most of the time, gold will go up when the stock market go down. This is just in general. You see, for example, silver, it was so good these 2 weeks or 3 weeks. Today, it just go 3.07 because it was so strong. It doesn't have nothing to do with that. So, going back to our Dow Jones. So, what you expect? Either tomorrow the market will come back very, very strong, Okay? This is an option. Second scenario is it continued to go down like we have seen this downtrend. Understand that downtrend, it could be like this, it could be continuing like this. Okay? It could be. Or it could stop for today and tomorrow it come back. Now, the choice, if you have put stop loss, you would be out of the trouble. Whatever happens in the market, it doesn't matter. Okay, so let's explain this very, very clearly. So here it comes the role of stop loss, because a lot of people, when I always speak about stop loss, people, they laugh. They say, "Oh, stop loss. Why do we use it? Does hedge fund use the stop loss? I say to you, you are not a hedge fund manager. You don't have $100 million, $100 billion in your hand and you play with them. So you are not. You are just someone who has a few dollars in the market. If you stay in a downtrend like we have seen, you will be losing 40 or 50% and you are gone. All your money is gone. Okay? Because it is your own money. A hedge fund manager, it is not his money. Even if he does mistakes, even if he loses money, it is the other people's money. He doesn't care that much. So focus on yourself. You are a trader. You have positions in the market. If you begin to lose, first you should have a stop loss, either physical or mental. This I always say. It doesn't mean that you should put stop loss as physical. It means you go and you put the order anyway the market goes going down and you exit. This is one option. Second option, for those who are having more control about their trades. They have no feelings. For example, let's say a stock, you say to yourself, okay, you see the chart, you say, okay, 5%, I exit the trade. That's it. Now, when it reaches your 5%, you see it in the morning or at 1 o'clock or 3, you see this 5%, you exit the trade. But this is very, very hard for people who are beginners. They can't. They say, what if the stock comes back? What if this? What if that? So they are weak. They say, oh, tomorrow, maybe the stock market collapses more. He loses 5, then he loses 10%, then 15%, then 20%, then 30%. Then after 1 month, he loses 70% of his money in stocks. Because the stocks are shorted. When shorted, it is a very big power of the world, the traders. Understand that these guys, they don't care. Understand that a trader, I always explain to you guys, those who follow me for many years, that you should make a difference between what we call an investor and what we call a trader. A trader, if the market is bad, he will profit from it because he will sell short. He buys puts. He will make money. So for you, the market is going down. It's good for him. He's making money. But for you, if you are going long, okay, like swing trading, you are going long, or you are an investor, okay. So investor, he doesn't rely on fluctuation of the day, of the month. He doesn't care about this, because if he buys Facebook, for example, he buys it for 10 years, 20 years, 30 years. He's not playing. It's like Warren Buffett. When he invested in stocks, he said that the market, he has lost sometimes till 50% of his money. But because he knows the companies, understand that. Because an investor, he is thinking about the companies, he is thinking about the future of the companies. It will grow, it will grow, it will grow. 1 year or two it's bad, the other years are good. So he doesn't care that much. He doesn't care about day trading. Warren Buffett, he will not sell today because the market is going down 5% or 10%. He will sell all his shares. That is stupid. So you should understand. Forget about investors. If you are an investor, it's another thing. Okay? It's another thing. You are investing for the long run. Except your company is bad. Not the whole market, but your company. If it is bad, if the whole world, if the whole stock market is going down, and let's say the stock market, almost all the stock market, the indexes and this all is going up, your company is going down. Here you should investigate why your company is going down, because it shows weakness. Maybe earnings are bad. Maybe the profits are bad. The earnings and maybe it has some problems. Maybe it has problems with customers. It has a lot of real problems for the company. Okay. And then you take a decision to exit this company. But you don't exit because of a day in the market or 1 week or 1 month. You don't exit. You are an investor. This is another thing. Now, what I'm speaking about is swing trading or day trading. You are trading. You buy from one point, you go to the other point in order to make money. You follow the trend, for example. Now, you buy at 20, it goes to 25, you are making money. But today, it goes from 25, it goes to 18. So you lost all your profits and you are down in your own money. So you should put a stop loss, or you should have what we call a mental stop loss. Okay? But if today you will say, this is, I say to all of you guys, whatever is your intelligence, whatever is your experience in trading, whatever. If you said, let's see tomorrow, this, you are not serious. Okay? You are not serious. So understand that. So, mental stop loss, it means, well, what is it? It means you should just say to yourself that I will exit a stock if it goes to that price, because I will not stay. You should calculate that yourself. Okay? For those who don't know, you can check my training level 6, how to protect your trades. And you can check training level 8, how to manage your account. Because it all goes to money management in your account. It's not only just about a trade. It's about a lot of trades that you have. So, let's say you exit. If you exit, you are okay, because you will watch. Your money is in your account now when you sell. If you reach your stop loss. Okay? It's in your account. The market goes up or goes down, it doesn't matter for you, because your money is there. But let's say the market continues to go down and there is selling short. What will happen to your positions? They will go down more and more and more and more. And later it is too late. When you begin to see a 15%, 20%, 30%, 50% loss, it's over. All your account will shrink badly. Okay? Will shrink badly because of your mistake. It's not the market. The market, yes, it goes up for 1 month, and then a few days it goes down. Whatever happened. This is a part of the market. It's not because some people are against you. Because this is the idea. The people, they think, oh, there is Wall Street. They will take my money. Okay, exit. Why you stay? Why you let them take your money? Okay. If you are investing for the long run, it's another problem. I'm not speaking about those. Those, it is another thing. I'm speaking only about the trading. That's why always when you watch TV, when they say it is the news, the bad news, I see them in each day for 2 months from end of February, when we have the coronavirus. Here I will show you just very quick when it began. At least you will understand. So you can see here. See. Did you see this? This is the coronavirus. Let's say I say from 20 February to 23 March. Now let's say this is the month of coronavirus, when America gets hit with a lot of coronavirus cases, with a lot of death. This is the news. But the news has stopped, and then the bad news continues. Okay, but the stock market was going up. You see that from 23 March till today, which is it means nearly two months and 20 days, nearly 3 months. Let's say it's about 3 months. So 3 months and the stock is doing excellent. So Dow Jones was 186. It goes to 276. Okay, so you see that. But here, if you can see these days from the 23 March till this week, which is Monday 8. Okay, so all these, if I ask you, if I say, I tell you the question, why all the bad news didn't stop the market in these 3 months? Why? Because they wanted. They let the market goes up again, and then they will come and sell short. Okay? They can, for example, buy huge amount of when they sell short, they stop selling short. They buy back. It means to give all the shares that they sell short to the broker. What they do again, and they buy and go long. When they buy long, what do? They buy long, let the other people go buy. 3 months, the stock market is good. They make a lot of profit. What they do now? They will sell all their shares and then begin to sell short. So when they sell all their shares, makes the stock market to go down. And then they sell short more. So they create crisis in the market. So all the people begin to sell. They make money again. This is the game of Wall Street. And this is for, the stock market begins in Amsterdam with 2 stocks. I think in the 15th century. From the 15th century till today, it's the same story. But people, they get bombarded by this news. Oh, it is because of the Fed. It is because of coronavirus second wave. It is because, but these 3 months we have 3 million unemployed. Now we have more than 40 million. Each week they say bad news. People are losing their jobs. People are laid off. People, they don't have money. We have demonstrations. You see the demonstrations? The protests of George Floyd? Why the stock market doesn't go down in this protest? Why? Because Wall Street have an agenda. They say, okay, we buy here, we sell here. We buy long, we sell short. That's it. Now you tell me, who are they? I don't know. No one knows. But the government knows. The IRS, not the IRS, the Security Exchange Commission, they know. But they know what? Because selling short is legal. They do it wherever they want. No one will stop them. Because the market is created like this. In real life, you can't sell the house or a car of your neighbor, and then when it goes down, you sell it with a low price, and then you take the difference. You can't do that in real life, but you do it in stock market. That's why it is the game of doing irreal things. So, what I say, I always try to explain things in the depth. What you see, if they told you, oh, it's because of coronavirus, second wave, okay? The whole America was looted, and we have demonstrations, and police, they get caught, they got charged, someone is dead, a lot of looting in the market. No, all this news, it doesn't happen, nothing in the stock market, and the stock market is going up very, very good. There is no problem. So who are these people, these traders, that they don't react to what's happening in America, which is something big? Why today? Do you understand the game? Everything in the market is just a game. So either you understand the game and do trade well, you make money, or you play the fool and go and watch entertainment. If you are going to TV, you buy some stock because a guru tells you to buy, and then he tells you, no, hold for 2 months. And then you hold for 2 months and you lose all your money, like in the month of February and March, where the coronavirus news hit. They say it hit, but coronavirus, we have it from January. We have it from January, not from February. Okay, so all this news is for entertainment. They know that something is what's going on in the market. They know that you will come up to the stock market and not stock market. They go to the big channels of TV, and then you try to understand what's going on today. It's coronavirus second wave. Oh yeah, second wave of coronavirus. And what about these 2 months? Do we have coronavirus? Yes or no? And the toll of death, is it increasing or is it decreasing? It's increasing, right? 2 months or 3 months from February. Was it going up? Yes or no? Yes. Why the stock market doesn't go down? Why? And why, after the corona news, as they say, 1 month going down, why the stock market goes up again? Okay? So these questions, they will never answer. What the causes they give is just, you say, investors are scared. Who are these investors? The investor is never scared about coronavirus or about anything. He is investing in companies for 10 years, 20 years, 30 years, 50 years. Warren Buffett has been investing in Coca-Cola for 60 or 70 or I don't know how many years. From the beginning, from the 50s, 60s, 70s, he bought millions of shares of this company until now. Does he sell just because of coronavirus or because of 2008, when the stock market lost 50% of its thing? No one has sold. Investors didn't sell. And then the market goes back, and it was very good. And the next year, the other years, and it's very good. So you see the game? Understand, guys, the game if you want to stay. Okay? And don't cry because you see people are selling short. Either you do like them, you buy puts or you sell short. If you don't know, get out of the trade and watch. Okay? Understand, you come here to the stock market, which is an easy game. It's not difficult. People are selling short, you sell short. Okay? People are going long, you go long. That's it. It's so simple. In the morning, he is a day trader. He sent me he contacted me. He say, "Oh, the market is bad. I was scared. I would not sell short." I say, "What do you do? Are you doing day trading?" He say, "Yes." I say, "Why you don't sell short? What's the problem with you? If you are day trading, you don't sell short. What do you do in the market here? Okay, change the business. Do something else." So understand the market, follow the price, make money. The market going up, going down. If you are like a swing trader like me, and you're following a trend, whenever you see that the market is not behaving well, it hits your stop loss, get out. Now when you get out, you wait. If things go good, you come back. If not, you can sell short. You can do the what is it called? You buy put options, or you can do what's called the inverse ETFs, and you sell short for ETFs. That's what you should do. If you don't know, try to learn. There is no way. There is no way someone who texting you each minute and say, oh, sell short, go long. No, you should learn by yourself because it is your money. You are responsible for your money. No one is responsible for your money. Okay? Differentiate between what we call investing and trading. Trading, you should know how to sell short, to buy put options, and to go long. You should do the three things: selling short, buying options, and going long. You should know how to do this. You should have a strategy that helps you make the money. If you don't know, learn from someone who knows. Don't try to go to news, entertainment, and you try to some gurus who have never traded in their life. They will tell you what to do. Investors scared. I don't know. The stock market goes down. Second wave of coronavirus. You know, these stupid things they say. Okay, it doesn't work in the stock market. Okay, so thank you very much, guys. So if you have questions or so, please ask questions. If you need me, send me an email. I can help you with whatever I know. If you want a training, it's near you. And please subscribe to my channel. At least I can help you more with my videos. Thank you very much.